Why is the luxury home sales surge so important to every single Bay Area homeowner, buyer, and seller? Coming up on this week's Silicon Valley Snapshot. If you've been watching the previous videos that we've put out and paid attention to the Bay Area housing market, you'll note that the narrative up until this point has been the lack of inventory driving prices, right? Supply, demand. And right now, up until this point, the supply has been way lower than we're used to experiencing, but that is no longer the case. So let's dive into the numbers and dissect what's going on in the marketplace right now. First up is Santa Clara County data, where we see inventory levels month to date. So in the month of February, month to date, as opposed to last year, inventory levels are up actually 5%. Inventory is no longer down year over year, and that has been the case. So this is new data, this is new information that is coming to us, whereas pending sales are up 31%. So despite the increase in inventory, we're seeing an even stronger increase in demand in Santa Clara County. Now, here is the tricky part, and here's where the numbers really help us understand what's going on with the marketplace, because you'll read the headlines, you see that the market's going insane, that homes are being bid up with multiple offers, and you're seeing $100,000, $200,000, $300,000 over list price. That is the case, but primarily in the single family sector. So when we look and we just focus on the single family numbers in Santa Clara County, it's a slightly different story. So you actually see that for sale inventory in Santa Clara County is down 15% year over year. So inventory levels are still suppressed when compared to last year, whereas pending sales are still up that 30% that we saw within the entire county for both condo, townhomes, and all residential properties. The difference there is that the inventory levels for the single family sector are down, whereas overall we're seeing an increase in inventory levels. Now, let's look at the condo numbers for Santa Clara County. So the condo and townhome numbers are actually very interesting. You see that active inventory is up month to date, year over year, 51.8%, whereas the pending sales are up 50.8%. Now, look at that graph. I want you to look at that graph and see that light green line is inventory level, and that red line is pending sales, or are pending sales. Those are literally the same. They're right there. That means that buyer demand is keeping up with this excess inventory. This excess inventory is being absorbed by the marketplace. It's being absorbed by the buyers. So in Santa Clara County, despite the fact that we're seeing higher than normal inventory levels for condos and townhomes, and remember, this is still pre-COVID numbers that we're discussing right now, right? So in February of last year, we had not yet experienced the effects of COVID yet. Inventory levels up 50%, but pending sales keeping up with that excess supply. By the way, if you want more data like you're seeing right now, and you're a buyer in today's marketplace, you're looking for a relevant data set to help you make your home buying decision, you can text the word data plus the zip code or the area or the neighborhood that you're looking in, and we will send that data straight to your inbox. And if you're a home seller in today's marketplace and you're looking for a data set to help you price your property appropriately, because right now, as you will see, pricing strategies matter more than almost anything else, you can text the word data plus your property address, and we will get that data delivered straight to your inbox. Now back to the numbers. San Mateo County behaving very similarly to Santa Clara County, where we see 7.2% increase in inventory levels month to date. That has not been the narrative, right? In San Mateo County, it hasn't been, but in Santa Clara County, that was not the narrative. The narrative is inventory is low, inventory is low, inventory is low. Inventory is not low anymore. Inventory has normalized back to where we were experiencing at this same time last year. So what gives? Again, it's the single family sector that's behaving differently. So in San Mateo County, the single family numbers down 9.9%. The single family inventory is actually down 9.9% year over year, whereas pending sales are up 25%. So again, we're seeing this huge difference between condos and townhomes, especially in San Mateo County. If you look at the San Mateo County condo and townhome numbers, you'll see again where inventory levels are up over 50%, 55.4% year over year. But the pending sales are not keeping up with it in San Mateo County, and there's so many reasons why. But you have to look at the work from home fad that's going on right now. There's a lot of people that are moving out of the San Mateo County area, that region, because they no longer need to commute into work, and commute is no longer a part of their decision-making process, at least for right now. Because that's the case, we're seeing a huge decrease in buyer demand for condos, especially condos, and townhomes somewhat, but especially in the condo market, we're seeing a huge decrease in buyer demand and a surge in supply. Why? Well, there's no tenants for those investors anymore, and they need to liquidate. It makes a lot of sense intuitively, and then when you look at the numbers, you're like, oh wow, the numbers support intuition. crazy. Now, let's move over to San Benito County. San Benito County, if you've been watching my videos, you'll know has been a hot topic since pretty much the beginning of shelter in place. Inventory levels are down 64.5% year over year. So whatever's happening in Santa Clara County is clearly not happening in San Benito County. We're still experiencing those incredibly low inventory levels in San Benito, whereas pending sales are up 59.4%. That is a huge difference. I mean, the swing in the way that the environment of that market feels to the home buyers and sellers has completely turned upside down over the last year. That environment is still really creating a ridiculous surge in home pricing down in San Benito County. I mean, it's incredible to see what my team members there are experiencing on a daily basis when they're writing offers for their buyers. It is insane. And when they're listing for their sellers, they're winning big. Let's flip over to San Francisco. Again, not much has changed there. There's not much to report. Inventory levels are up in San Francisco, 42% month to date year over year, whereas pending sales are only up 4%. That demand is not keeping up with the increase in supply. What's new? That has been the case in San Francisco for a long time. Now let's flip over to Contra Costa County. If you've watched these videos, I've said for a while now, Contra Costa County is literally the hottest market in the San Francisco Bay Area. It has been for some time, and the numbers continue to support that. We see a 37.4% decrease in inventory levels, whereas we have a 22.6% increase in pending sales. That is for the entire market, but when you look at the single family sector, it's even hotter. 48% decrease in inventory levels year over year and a 34% increase in pending sales. And finally, rounding out the counties is Alameda County, where inventory levels are down still, but only 5.6%. That is way lower than it was even a few months ago, where it was down like 30% month to date year over year. So definitely you start to see inventory levels, you're starting to see inventory levels creep up. And we knew that this was going to happen, but the interesting story is that demand is still there. That being said, even in Alameda County, we're seeing that the single family sector is still down double digits, 22.7% decrease in inventory levels year over year, month to date. And pending sales still riding high at 33.5% year over year increase in pending sales in the single family sector for Alameda County year over year. So what does all of this mean for Bay Area home buyers? Well, right now, what you're starting to experience is inventory levels, or our inventory levels, kind of creeping up. Now, the single family sector inventory levels are still super low. And how long will that continue? The answer is, I don't know. But what is interesting to note is that in the luxury home market, and we're looking at anything that's over $3 million or so in the Bay Area, so homes that are above $3 million, and of course in different areas, luxury homes might be 4 or 5 million. In some areas it might be like 1.5 to 2 plus. But we're focusing really on any home in our marketplace over $3 million. Looking at this data, we see that inventory levels in the high end are down 15%. Now, that's not a huge figure, but what is huge is the difference in pending sales and sold inventory month to date year over year. You're seeing a 50% increase in pending sales and a 118% increase in sold listings. Now, why is this so important? If you've been watching my videos for any period of time, you will know that whatever happens in the high end eventually trickles down to the rest of the homes here in Silicon Valley. And so when we look at these numbers and we see that the luxury market is actually performing well, and it is becoming better and better for a home seller to sell their home in the luxury market in the high end, that should be indicative that things will be great for home sellers in that middle to low end for a long time. You'll see that inventory levels in the luxury home sector are still down year over year, month to date, 15.1%. But the real story is the pending sales, or are the pending sales and homes sold. Pending sales are up in the luxury sector, up 50%, and sold inventory is up 118.4% month to date year over year. Why is this important? And why is this so important to every single Bay Area homeowner, buyer, and seller? The reason is if you've watched my videos for any period of time, you'll know that whatever happens in the high end, whatever happens in the luxury sector, eventually trickles down to the rest of our markets and our marketplaces. And so when you see that the numbers there are starting to actually turn even more into sellers' favor, where we're seeing month to date pending sales going up even higher, and sales almost over doubling year over year, when you look at those numbers, you start to realize that the market isn't going anywhere anytime soon, because those numbers are reflective of the demand that is going to continue to persist in the other marketplaces here in the Bay Area, regardless of the pricing. The market's already great everywhere in the Bay Area, and the luxury market is starting to perform even better. That means that, for all intents and purposes, we're going to see the marketplaces in the Bay Area perform, regardless of price, even better in the months to come. So when the question is posed, how long is this market going to last? Well, a lot of times when you look at the luxury markets and you start to see them suffering, right? You start to see them start to go down. You can predict that we're close to, we're like the end is in sight, right? The end is near. But that is not the case. In fact, it's the complete opposite. The luxury markets are getting better. They're getting stronger for home sellers. That will only bode well for the rest of the markets and the rest of the Silicon Valley marketplace for many, many months to come. So if you're asking yourself, when will the market soften? The answer is, I don't know, but the answer is also not anytime soon. And the numbers are there to prove it, and they're there to back that statement up. So if you're in the middle of the home buying process right now, in the middle of your home buying journey, my team is working with dozens of buyers right now. And it's the same conversation every single time. Right now, we're in towards the end of February, and the question is, how much longer is this market going to last, and is now really the right time to buy? The answer is absolute, because if you look at the projections for 4 to 5 months from now, you're going to be able to afford less house for the same price in 4 to 5 months. So why wait so that you could afford less house? It's not like your budget's going to go up. So if your budget's not going up, then why are you going to allow the market to price you out of the home that you really want to be in? That doesn't make any sense to me. So anyways, just some food for thought for today. If you're a home buyer in today's marketplace, you can click this video for a comprehensive guide on how to buy a home in the San Francisco Bay Area in 2021, or for help buying or selling any property in the San Francisco Bay Area, you can text me or call me at the number down below. This is Danny Gould with the Selling Silicon Valley Group, and I will catch all of you in the next video.